18.
Hello and welcome to Big Deal. Today we have a special panel from Mergers Alliance, which is, remember, a congregation of 20 firms in the M&A space across 25 countries. And today it's Singhi Advisors from India, mid-market cross-border M&A specialist firm, which is hosting all these companies here in India in Mumbai. And let me introduce the various members right here. Singhi Advisors is also, celebrating the 25th anniversary today. So many congratulations to Singhi Advisors, and we have chosen out of the 20 firms that have been present and part of Mergers Alliance, the 5 top ones, of course, India included, and USA, Germany, UK and Japan. These are the most active and the highest level as far as M&A traction from India is concerned. So let's chat about how the M&A is going to develop with each of these countries and how we are going to really take it forward. Gentlemen, so good to have you here with us on CNBC TV 18. Let's start with Mahesh then. Many congratulations for the 25th anniversary. And how is the traction really developing in the mergers and acquisition space? We've seen quite a few deals, but with the equity markets really heating up, is it really going to be a dampener on the deal street?
Yes and no, both. When the equity market goes up, it always have a problem for valuations for M&A. But as you said, nothing is easy in this world. You have to create your own deals. So one impact is when the equity market goes up, valuation goes up. So companies become more acquisitive. So that compensate for the loss of seller.
So let me then take it to Phil, who comes from the United States of America. Phil, we have discussed a lot about Trump victory. Was this a surprise really coming in? And is it really uncertain now as far as economy is concerned?
It was certainly a surprise.
Yes.
He is a personality that ran without any policies. So we don't really know what he stands for in terms of what's next. But it's interesting that the market actually went up after his election.
Of course, across the globe.
Yeah.
Yes.
Which is a really interesting reaction. I mean, people think when Obama got elected, it went down 5.5% the first time, went down 2.5% the second time. But here it just got overnight. It went down 750, 800 and came all the way back. So we'll see. I think there is a lot of uncertainty, but the power of that office tends to bring people down from their boastful saying.
You know, US markets are the deepest markets. Any Indian company would love to have funding coming in from the United States of America. But in the last few years, we haven't seen many strategics making their way here. We have some funds, definitely. Some Indian companies have shown interest, especially in pharma sector. IT is definitely, it is the biggest market for us, the Indian IT services. But how do you see the interest? Is it coming back with also Modi making many rounds to the US in the past few years?
Isha, I think that it is, but you have to start in the U.S. market, which is so big. And we had the crisis in 2008. And then we had this close down of deals. Nothing happened for a long time. There's a natural supply of deals that need to come every year. The U.S., people don't talk about it, but it is an aging economy as well. About 80% of all of our private companies' CEOs are over age 56, and they need to sell their businesses. And so when the market was closed, those deals didn't happen. And when it reopened, interest rates were low, funding was cheap, and there was this big backlog. And so what do you do when you're in the U.S.? You go to what's closest, and you buy it up until valuations get so high, as Mahesh said, and then you have to go find growth elsewhere. It's a very natural cycle situation. So while that was going through, you had the stuff that Modi did that has made a big difference. And you do see it in the private equity business. I mean, there are only 11 external private equity investments in India in 2013, and there were 85 in 15. So it just seems to be a market that is starting to get mature.
Yeah.
And if there's anything different about this M&A cycle than any other one I've had in my career, it's the level of due diligence requirements now are a permanent change since the cycle. And this has been a very difficult country to complete that diligence process, and it's getting much easier.
Is it?
I think so. The level of inquiry we have is quite high. We can talk sectors later, but there is a lot of stuff going on right now between us and your country.
So Japan is another important market for India, Sean. So do you think the cases like Daiichi, Ranbaxy, Tata Docomo, they have really dampened the spirit when it comes to Indian investments by Japanese companies, or is that improving now?
Yes, about the Ranbaxy incident, at that times it had a very bad just connotation, and a lot of the Japanese companies just thought twice or considered twice before coming here. But that memory is gradually fading away. Okay. And now people start just understanding after China, India should have the best business opportunities.
All right, so much more positive
much
sentiment.
More positive.
And we are going to see much more traction. So I'll talk about the sectors coming back, but to the UK market, of course, Keith, we've seen like cultures have been similar with many Indians over there in the UK. But post-Brexit, is there a big difference in the kind of associations that we have? We may see, is it a wait-and-watch strategy by most of the companies, or is it business as usual?
I think taking Brexit as a specific, at the moment, we think it's pretty much business as usual. The UK economy has come out robust. We're not seeing any signs. We know inflation is coming, but if we can manage that positively, then some inflation in a market is good. So I think people are positive about the opportunity, and I think India is absolutely a territory that I think will get more attention from the UK than perhaps it has previously because of Brexit.
Despite Vodafone tax issue?
Well, I mean that's a mega deal. I mean, I think if you take it down into the sort of the real commercial world, shall we say, then.
But Vodafone is still pumping in money here. $7 billion
substantially.
Substantially, having raised nothing from Indian markets, even though IPO has been already announced.
But the fact is, the tax was not paid.
Yes.
It's a actually correct position. The tax was not paid.
That is still sub judice.
I don't. It's certainly if I think about it from a UK perspective, yes. It isn't something that's part of a strategic decision around a board table that we're sitting around. You know, people don't sit there and talk about India and say, let's talk about Vodafone before we talk about the commercial realities of whether it's a good strategic plan for their business or not, as to whether India is the right territory or somewhere else is. So it's a headline thing, I think, rather than something that really impacts on people's decision making.
All right, so that's a big statement that it doesn't really affect the business decisions. If you have a strategic investment, then that will not really stop because of one tax issue that's going on between the two companies. All right, so coming to Germany, a brighter spot in the European market, and I'm sure India would like to have more associations. We have some of the companies now, Ervin, we have Bharat Forge, Motherson Sumi, as well as Endurance, many others, and your engineering focus and that strength that really comes to the table could be really very valuable for some of the Indian companies.
I think this is a huge opportunity for India as well. They are trying to pick up technology assets which are in the hand of these older CEOs, and we have fantastic technology. It's still pretty regional, at the lower end. And this is available for Indian companies. There are no restrictions whatsoever in acquiring a company, and you can see that Bharat Forge and Sumi Mothers and then Emetech, who have been serial acquirers in the market. Just to pin some examples, there's also Mahindra and others. They have done very well. I remember the first time when Bharat Forge came to see us when I was still at Citigroup in the 90s. This was a 60 million company. Today they're the same size as ThyssenKrupp's automotive supply business, a multi-billion company. The same applies for Sumi. So there's a huge opportunity for entrepreneurial Indian companies to buy up technology, get into the not only technology but also access to the OEMs worldwide, and become a supplier of the global supply chain. To Airbus, to Daimler, to Volkswagen, to whoever you pick them. That's a huge opportunity.
Oh yes. So Mahesh, we've heard perspectives coming in from all these countries. Which one do you think is the most active on the deal street? Which of the countries really is getting maximum traction when it comes to M&A?
I think they are all very varying situation. Maybe if you had asked me 2 years back, Japan India was most active. In last 2 years, we did 6 M&A between Japan and India, which over late have slowed down, not because the need is not there. The most natural buyers and this had come in different sectors. Now they're taking some time and they will come back again. So it's just a matter of time, the investments. When I say USA, until 2008, they were very aggressive in India. Then after Lehman Brothers and this global issue, these things, they're holding back. We did other way around. We Indian company we advised to acquire business in USA, which was happening very successfully. Now we are seeing a traction back again from US mid-market companies, buyout fund who are not entered, and other companies to come to India again and again.
Which sectors are we seeing most amount of action?
You can say financial sector, you can say healthcare, you can say chemical sector, which is absolute new sector in the traction, lots of things. Polymer technologies and business services. Now all around you see these are largely consumption driven or a strong B2B process with sector. Lots of transitions we are seeing. And we started saying that there is no one sector, there is no one country where you can see it happen only. You have to pre-sale. So once you start hitting every time, meet promoters, meet CEOs and sell a concept and say it's still growing. At some point time they come back again. So I think it's the time when US is coming back again and we see lots of potential. Like Germany we said, I don't think there's a country like Germany has so much of technology disease and similar culture where family owned. You can find third generation, fourth generation, sixth generation. We have quite a few German clients which are fifth or sixth generation, 152 years old and still holding on. Even Bosch Post, that is a world's oldest and the largest family owned company.
So India is the third largest FDI provider for the UK, but is it going to be the other way around as well?
I think the opportunity is there for the UK. I think it will be different. I mean, the history has been maybe in aerospace, in automotive, in the engineering sort of side of life. I think the opportunity is for the more service side. The UK is a service-based economy now, largely, and therefore it looks at its own market, and there's not a lot of growth there. You know, a lot of the large businesses have grown in the UK as much as they can. Europe is maybe more of a risk to sort of grow into those markets. The US is fine, but it's a different market, and there's plenty of UK businesses have lost their money going to the US. So I do think India is an opportunity. It's there's definitely a growing market and a big opportunity, and there's lots of embryonic service-based businesses in India where the local market has shown an appetite, but perhaps they don't have the business model or the infrastructure or the knowledge or the IP to actually scale that business up. And I think that's where we might see some larger UK businesses coming in, business services, facilities management type operations. So I think there is inbound opportunities, but as Mahesh said, I also think there's considerable outbound opportunities for some of the larger Indian corporates who are looking for technology, looking to bring home some of that proprietary knowledge and apply it themselves in this market.
You're talking about European acquisitions, but I'm not too sure with the equity market, especially if listed companies, they will be very keen on the companies going to Europe for acquisitions. That's really not considered that great because a lot of countries have gone belly up. There is financial crisis across Europe, barring of course Germany.
I think if you look to China, they're looking at it in a very different way, as I said.
A very long-term view.
Yeah, and they're not acquiring the businesses for Europe itself. They're acquiring the businesses to get with the right technology into the global supply chain of huge OEMs. And this is interesting.
Yes,
So
I agree with
I think you need a bit of a different perspective on that, and there's a huge opportunity.
Of
I think.
course,
Yeah.
I take that
Yeah.
point.
Yeah.
I take that point, and that can provide a platform for a global play for most of the countries, while it's available cheap because the overall economy is not doing well. So there can be value buying at lower levels. I agree to that point. Sean, you have a lot to say about which sectors in which, apart from infrastructure, that there can be M&A between India and Japan.
Yes, let me talk because I am learning quite a lot from Singhi because they are supporting us and providing a lot of the teasers and so on. And what I'm learning is from a lot of the Indian companies. Japanese companies looks most ideal in terms of the technology and in terms of the funding.
Yes, so despite Ranbaxy Daiichi, we have still seen many M&A.
Yes.
We have some steel companies also very interested who are making their way into India once again. So that's happening. So apart from this, are there other food processing, warehousing, and which are the new areas that are developing as a trade route and M&A between the two countries?
Japanese restaurant chain or food companies looking for, but they cannot get just the precise opportunities, but they are waiting for. And some of the materials ones are just trying to come in. And another just big sectors now coming more and more would be the e-commerce. IT already over here.
Yes.
I'm not talking about NTT or so on, the so-called e-commerce. That's also now booming in Japan. It's a new sector.
Yes.
That's just another area.
So many sectors in which we are seeing traction, just not in a few of them. Mahesh, many Indian companies also looking at Japanese.
So like after USA, Japan is very strong big pharma market, but very closed market. It's difficult to enter. But still Lupin and Dr. Reddy's and all making big efforts.
In IT also it's a very closed market
So
and difficult to enter, and TCS did enter.
So once you enter, these are very long-term markets. So we strongly believe that after USA, even Indian company will also like to de-risk, expand other geographies, and this way they're entering Europe and Japan also together. And then once a couple of good acquisition and good experience take place, others always follow. So once you make a dent in that market, then you are there.
So actually, that's what I had heard, that entry into Japan is very difficult, but once you enter, it can just turn out to be very lucrative. I think that American dream still remains with the Indian psyche. Are you seeing enough traction? Have you managed to really capitalize a lot on that particular aspect? Of course, debt issue has been immense for the Indian companies in the past few years, so that has really restricted them. But are we coming out of that? Do you see that dialogue really restarting?
Yeah, I see it in three, Nisha, in three sectors in specific. First, in IT services, obviously. And what I see from our stuff is where we already have some operations in India and in US. We are raising equity now or selling, depending on how the deal works out, for a large systems integrator that has 500 employees. I'd also say you have a huge infrastructure here for mobile payments because we did, it's just a different setup. And so we see a lot in fintech.
Is 2017 will be a watershed year for M&A transactions? Last few years weren't that great.
I think lots of things have happened in last 2-3 years time, and those who are, you rightly said, the gap between men and the boys is clearly coming out. So there are lots of inquiries, there are lots of traction, there are lots of things. It's just that the time period required to close a deal has gone up from average 6 to 8 months time now to 1 to 1.5 years time.
And regulatory aspects also
And
have a lot
more
to do
than
with
that, when there is a confusion, those who can take difficult things head on, they are going to be winner. Those who are not, they like to leave the tough for others.
Right.
As long as your pipeline is good, you are engaged, whether it's a 2016 or 2017, 2020, doesn't matter. We are very optimistic about Indian market.
All right, Mahesh. So that's a very optimistic view really coming in on the deal street. Thanks so much, gentlemen, all of you, for sharing all your thoughts and insights on the deal flow. It's a very competitive field and may be profitable next year for all of you going forward. So thanks so much for joining us right here with your valuable insights on CNBC TV 18. All right, with that, it's a wrap on this edition of Big Deal, but I'm sure we got the perspective from 5 different countries on the cross-border transactions as far as mergers and acquisitions is concerned. And the focus here is that it's going to be optimistic, and there are many dialogues really happening between Indian companies and the overseas companies, and some of them will really fructify in big bank deals. All right, with that, it's a wrap from me. Thanks so much.